Here's a bold statement. While the world debates Bitcoin's future, one Japanese company is betting its entire existence on it and just doubled down with a massive purchase. Metaplanet, a Tokyo-listed firm, has just added another 775 Bitcoin to its treasury, bringing its total holdings to a staggering 18,888 BTC. This latest buy, worth $93 million, pushes the value of its Bitcoin stash to roughly $2.17 billion. Even as the cryptocurrency faced a downturn over the weekend. But here's where it gets controversial. Is this a visionary move or a risky gamble? Let's dive in. The numbers behind the headlines. Metaplanet's latest acquisition was executed at an average price of $120,000 per Bitcoin, raising its total investment in the cryptocurrency to $1.94 billion. This brings the company's average purchase price to $102,000 per BTC. In a tweet, Meta onward and upward. But this optimism comes at a time when Bitcoin's price dipped below $115,000 over the weekend, leaving many investors uneasy. Garovich acknowledged the disappointment, but emphasized the company's long-term conviction, stating, "What gives us confidence is the foundation we are building." A dramatic corporate transformation. Metaplanet's journey is nothing short of remarkable. Founded in 2010 as Red Planet Japan, the company once operated a pan-Asian budget hotel chain. However, the COVID-19 pandemic shattered its business model, leading to property closures and 6 consecutive years of losses. By early 2024, its stock had plummeted to just $1.32. That's when the company adopted a radical strategy inspired by Michael Saylor's MicroStrategy, using Bitcoin as a corporate treasury asset. This move has since propelled its stock and repositioned it as a major player in the crypto space. But here's where it gets controversial. Analysts are divided on the implications of Metaplanet's strategy. Hank Huang, CEO of Kronos Research, notes that such large-scale Bitcoin purchases by corporations could tighten liquidity and increase near-term volatility. At this scale, it's not just an investment, it's a market mover, Huang told Decrypt. However, he also highlights the potential benefits, such as hedging against fiat currency devaluation. On the flip side, Jay Zhou of Tiger Research warns that not all companies can replicate Metaplanet's approach. Asia's regulatory landscape varies, and not every firm can handle the risks, Zhou explained. He points out that over-reliance on Bitcoin's price movements without steady cash flow could lead to sudden financial strain. The risks and rewards. The primary risk, according to Huang, is Bitcoin's notorious volatility. Sharp price drops could strain Metaplanet's balance sheet and erode investor confidence. Additionally, equity dilution, where issuing new shares reduces existing shareholders' stakes, remains a concern, especially if Bitcoin and the company's stock don't perform as expected. Despite these risks, Metaplanet is doubling down, announcing plans for a $3.7 billion stock raise earlier this month to fund further Bitcoin purchases. And this is the part most people miss. Metaplanet's strategy isn't just about Bitcoin. It's about survival and reinvention. By pivoting from a struggling hotel chain to a Bitcoin-focused treasury, the company has not only revived its stock, but also positioned itself as a pioneer in corporate crypto adoption. However, this bold move raises a critical question. Can other companies follow suit? Or is this a one-off success story? What do you think? Is Metaplanet's all-in bet on Bitcoin a stroke of genius or a recipe for disaster? Could this strategy work for other companies? Or is it too risky? Share your thoughts in the comments. We'd love to hear your take on this polarizing topic.